The pain won't stop for crypto until this happens. In today's video, I'll be running through the exact situation with Bitcoin now, why price is being suppressed, what's hurting crypto investors, and the exact setup that I am currently targeting in the market. There are a couple of things in the market that need to desperately shift in order to see Bitcoin sustain a rally, because recently it hasn't been able to sustain a single move to the upside. So without further ado, let's get into the video and discuss what's happening on the charts. Firstly, looking at Bitcoin on the 4-hourly chart, a setup that I did post in my Discord the other day is pretty much playing out one for one. I said on Sunday afternoon that Bitcoin is starting to roll over again. Gut feel is that we fill the H4 wick and then target 90K again. Choppy conditions, so just looking for textbook reversal setups. So as you can see, I said that we were going to come down and then we were going to target the 89 to 90K region again. We have come down. We are starting to get the slight pullback that I expected for a potential reclaim play up to 90. In terms of how you could trade this, if you were intraday longing, you could potentially look at a move up to 89. I think that's a little bit risky unless we got a deeper retrace and a higher low. So that is something to look out for. I actually think that the higher, more confident setup is going to be a short into this pocket. If we do move into this 89K region and start to roll over again, because we would need to consolidate above 89, I think you could potentially target a hedge short on Bitcoin. And, I see some people like, oh, how can you be bullish on Bitcoin mid to long term? How can you hold Bitcoin and be shorting? Well, you can do all sorts of stuff in the shorter term to cover positioning and hedge against your long-term exposure. So I'm a big fan of Bitcoin from a longer term perspective, but in the shorter term, it is weak, and we have to objectively accept that it is weak. Now, in terms of a reversal, so a series of price action that I'd be looking for to validate a reclaim, I would be looking for Bitcoin coming back up above this 89K level. You can see this is a very key level that we've been reacting to. You can see all throughout the month of December. It also acted as a support zone in January as well. And this is the level that we recently lost in order to create this new downtrend. So on the lower time frames, I'm really looking at a reclaim of 89 to 89.5. That is very important, because if you scale up, you can see that this is technically just a lower high and potentially a new trend. So I think what you can do now is kind of barbell your trading. Think about short-term intraday positioning. So for example, this as a potential reversal setup here, or a reversal setup into a swing short. And you can barbell that with longer-term positioning around range extremities. And this is where I think, higher probability, bigger size setups start to come into play around the range extremities. So you can see Morin here, who's one of the amazing analysts in the Mars High Club, is targeting a setup slightly higher than mine for a potential short at the range high, and he's also targeting a range low buy scenario if we do end up getting down there. So you can trade intraday or reversal setups within the range, but at the end of the day, like, we are just in a range for Bitcoin. It's been a painful range, and that's being made a lot worse by the gold rally and the silver rally, which we'll get into today, because I have a few thoughts around how to position there and how to think about Bitcoin in the context of gold. But right now, it's very clear that we are just range bound on Bitcoin. So you want to do the majority of your acting in terms of buying, selling. Obviously, you have this mid-range pivot point, which is quite important at 89, which I am maneuvering off, but you want to do the majority of your actions towards range high or towards range low. So until we react to one of these zones, obviously you're going to be trading with smaller size. So I am quite interested, if we did get a further sweep to the downside, in loading up. I'm actually looking at loading up some of my grid bots in that scenario, because this would be a great opportunity to set up longer term positioning. So that's something I'm very interested in doing, but just not comfortable opening those positions in the middle of a range right now. Conversely, you could look at either shorting or fading, a range high retest again, obviously depending on how Bitcoin's reacting to news at the time and how Bitcoin is reacting to the broader environment, which are all really, really important things. And some of the things that I'm looking to track how Bitcoin is reacting to the broader environment is ETF flow, because this gives us a good idea as to how the bigger players are positioning, and we are currently seeing outflows. So this tends to signal to me that the market is leaning bearish. And you can also see that the Coinbase Bitcoin Premium Index is also ticking negative. Typically, if it's positive, this indicates spot buying. So in absence of this, or in a negative environment for the Coinbase Premium, then this suggests to me that we are still in a negative environment. And let me just speak a little bit more broadly about Bitcoin and what's currently happening, because we can look at price action and chart and all this stuff, but more broadly speaking, I think there is a little bit of an identity crisis, considering the fact you have gold running and it's on an absolute tear. You have, risk assets like equities have been doing well. Have slowed a bit down at the moment because gold is really taking center stage, but equities have performed really well. And Bitcoin, which theoretically should be performing in the midst of, a massive debasement trade and, loosening monetary policy and a lowering US dollar, like it should be doing really well in this environment, but it's not performing well in this environment. So I think that's, continued to compound and weigh on the minds of, not just retail investors, but also institutional investors, also whales. I think a lot of people are now starting to doubt Bitcoin's role. However, you got to keep in mind that it's never really acted as digital gold. And I've been saying this on the channel for a long time. Like Bitcoin does best in risk-on environments, and equities have actually cooled down at the moment. So Bitcoin typically runs alongside equities. Now you can make the argument that equities were outperforming prior to this gold rally, even though they've cooled down now. And that's true, they were outperforming because Bitcoin was dealing with specific risk to itself as an asset class. For example, it had a whole bunch of OG whales selling. It had the whole 4-year cycle thing, which also caused a lot of selling. It had the DAT concerns that reflexively brought Bitcoin really high, but then when it also started to turn, it put a lot of pressure on Bitcoin. And then recently, you have quantum risk, which is impacting institutional allocation. So I think more broadly speaking, this like identity crisis or these shorter term headwinds, they can be eradicated, but they do explain the short-term positioning and why the chart does look like this. So for me, what I really want to see on Bitcoin, until I'm interested in, aping or looking at longs again, I'll continue to pick off like altcoin trades in the market if I see an opportunity. But what is stopping me from allocating to Bitcoin here is the fact, we're in the middle of a range and I want to see either a retest at a range extremity or I want to see a new uptrend starting to form in terms of microstructure on the lower time frames. Then I'd be much interested in getting involved again. But I think for now, there are enough headwinds in the market to make it pretty hard to position against the market right now. I still maintain bullishness on a mid to long term time frame, and I'll get into why I think there could be a bit of a catch-up trade with gold later in today's video. But in the shorter term, I think you really don't want to be rushing positioning here. And if anything, I'm looking at potentially some scalp short opportunities just because that is the momentum of the market. And I'm trying not to go against the momentum of the market until we have a confirmed breakout above the range high. And of course, you also have this 89K zone, which could potentially act as a pivot point to retest the range high. And that's like a small swing in the scheme of things, but you got to remember 89 to 93, that's a 5% move. A 5% move if you're trading or looking at altcoins or leverage or options trading. This can be consequential in the longer term. So the whole goal here is to compound smaller term moves into longer term positioning. And longer term positioning for me is allocation to Bitcoin. But I think something a lot of people have been wondering about is allocation to gold, because gold's been absolutely exploding. And I had a tweet here saying, look, being in crypto is tough as it is, but being in crypto while seeing metals flying is even more painful because it rubs salt in the wound. And I think a lot of people are feeling this way right now. And I think this is also what's putting pressure on Bitcoin and crypto in general. The fact that gold and silver are rocketing, which are objectively lower risk investments. So when lower risk investments get superior returns, on a risk adjusted basis, that's an awesome scenario for gold and silver holders. It's a pretty bad scenario for Bitcoin holders because they took on more risk to underperform gold. I don't view them in the same basket at all. I think that the primary reasons why gold and silver are running is because you're seeing a safe haven trade. So you're seeing debasement trades, so currencies being printed alongside unprecedented demand to acquire gold and silver, so precious metals through ETFs. You're seeing a lot of central bank buying as well, and global uncertainty and geopolitical tension, which is causing a really big flight to safety trade. Bitcoin is obviously not a flight to safety, especially when you have these concerns like quantum risk, and you have concerns around the concentration of supply, and you have concerns around the DATs. It's not really a flight to safety asset. Now, it very much could be one day, and I think eventually we're going to look back on Bitcoin as that asset, but it's not really proven in that environment yet. And until proven otherwise, it is behaving like a risk asset. So to look at gold and compare it to Bitcoin, I think is a bit of a mistake, because the way I treat gold in my portfolio is like cash. So I have it in the Barbell cash section of my portfolio, and Bitcoin is more of an asset which you're holding to get outsized returns through concentration. So diversification, for example, having gold as an asset helps you protect wealth, and assets like Bitcoin help you compound wealth. I think in the shorter term, it's really painful, but in the longer term, I do anticipate, because Bitcoin is a higher risk asset, that it outperforms gold over a 10-year period. It's just painful right now. At some point, I do think you'll see that catch-up trade take place, but obviously, Bitcoin is under a lot of pressure right now, and gold has a very strong narrative. So that is causing outperformance on the gold side. I actually did a bit of an analysis. I posted my gold silver macro report in my Discord. I'll read out a few of the points here to summarize my thoughts around metals, because some of you might actually be wanting to enter gold, silver, and these are my thoughts on that trade. Firstly, I don't think the trade is over, specifically gold. I think there's a decent chance we're entering local top territory for both assets. I know people say that every time, but this definitely feels different. And it's obviously being heightened by, odds of US government shutdown spiking again, some of the geopolitical concerns. I don't think it's in Trump's interest, considering also China's interest in gold, for this to keep ripping. I think at some point they're going to try and pump the brakes through either cooling down or de-escalating the geopolitical situation, potentially as well. Another tactic they can use, and obviously this isn't in Trump's control fully, but if they are slightly more hawkish, so if the Fed decides to pause rates and the dot plot shifts a little bit, that wouldn't be great for risk assets, but it'd be good for the US dollar potentially to try and stem this trade. So there are a few things that could happen. Obviously, that's a bad scenario for crypto. In that case, risk assets and crypto will perform badly. The good scenario for crypto is Trump keeps the dollar stable. He de-escalates the geopolitical situation, allowing the dollar to stabilize, and thus risk assets to actually catch a bid. That's probably the best case scenario, but I don't think this trade will last forever. From a multi-year perspective, though, I think gold and silver definitely have room to run. I personally project gold will end up between $6,000 and $7,000 in the next couple of years. I did my full report in the Discord. There are strong tailwinds why this is the case. But I think in the short term, aping in to try and chase returns is a very, very dangerous game. And as I said, I treat gold as like a long-term currency play, so a hard asset that I can keep as a wealth diversifier longer term. I'm not viewing this as a trade to make a ton of money. Personally, if I had to buy one of the two, gold or silver today, I'd be much more comfortable in gold. Silver, to me, this is just complete euphoria territory. I mean, Rand alluded to it before. He says commodities have gone parabolic and it could always continue for a while, but markets have taught me that assets that go parabolic always correct. If you buy now, you may catch a small part of the parabola, but the risk reward is not great. Your job right now is to find the next trade, the rotation trade. I think there are a couple of candidates for that rotation trade. By the way, I don't, as I said, view Bitcoin necessarily as a direct rotation to gold, because I don't think gold investors are rotating into Bitcoin. I think they play very different parts of your portfolio. I think what will happen is people could start to front run or speculate, or note underperformance, so new allocators could drift towards different alternative asset classes. That's not just Bitcoin, but that is also risk on assets which have been under pressure. I was doing some research in the group today around emerging markets, so potentially looking at an emerging markets fund. If you go into the crypto chat, Fabian and I were talking about that as a diversifier from US capital flight risks. So you could look at potentially, as Fabian points out here, an ETF like VEU, which is an all-world US index funds. There are options here to diversify that don't include gold, and I think trades like this will be a beneficiary of that general trend. But at the same time, I also think the narrative will shift back to being more US-centric at some point. These trends typically don't last for years. These things ebb and flow, and you're just seeing that happening quite quickly right now in the gold and silver charts. So in terms of metals overall, I think longer term, having a decent allocation, like 10% makes sense, but I wouldn't be aping in or FOMOing in. If you're really feeling FOMO and you really want to allocate to gold, you can just DCA in a little bit, build your position. I think it goes higher over time, but the odds of a local top are I think getting bigger and bigger as you start to see these blow-offs, but hard to time it exactly. We'll probably just do what it did before and run up, consolidate, run up, consolidate, run up, consolidate for a little bit, and then go on the next leg to the upside, because there's too much currency debasement happening right now, I think, for gold to have a big drawdown, and there's too much macro uncertainty. And is uncertainty going to go away? That's a question you have to ask yourself. It definitely can for the shorter term, but I'm not so sure that's the case in the longer term. As I said, secondly, I view gold as a hedge to my crypto holdings, because I don't think they operate in the same realm. And also my broader crypto trading and business. It's kind of interesting, because if you're trading altcoins, or if you have an edge in the altcoin market, or you feel like you have an edge trading crypto, then gold is in a way a hedge, because they're not very correlated right now. Like, one's a safe haven asset, one is very much behaving like a risk asset. For me, silver just makes no sense in my portfolio, because it's not really a hedge. It's definitely acting like a store of value right now, but it's a riskier one than gold in my opinion. So I'd prefer just to go for the Bitcoin trade. Like, gone to my head, if I was picking, to buy silver, gold, or Bitcoin right now, I think over a 2-year period, you're going to do better buying Bitcoin. But over a shorter term period, you're going to be better on the gold train. That is my general feeling of the market, just based on momentum. And it's hard to strongly advocate for Bitcoin when momentum looks like this. By the way, I'm not saying you should only buy into pumps. I'm saying, I think we have a much better chance catching a good entry on a little bit of strength to get some confidence back in the market and starting to see some of these signals shift, or, betting on an extremity. So if you did get a big flush to the downside, you have better risk reward on those entries. And then thirdly, and this is the most exciting part for people longer term, I think there's a strong chance Bitcoin will catch up at some point. And this won't be, gold buyers rotating suddenly into Bitcoin. It'll be the trade in general that evolves over time as institutions continuously allocate more to Bitcoin, because that is the real buyer of Bitcoin right now. The real marginal buyer is not retail anymore. It's institutional adoption. And at the end of the day, the macro setup does favor BTC with the debasement trade that is currently and likely is going to continue to return. I mean, Trump is going to try and continuously stimulate the US economy. I can't see that going anywhere anytime soon. So at some point, if you think equities will have a run, Bitcoin should play catch up. The thing with Bitcoin is you don't know when it will do that. So people try and time it, and they try and rotate, and they try and chart. But Bitcoin is the type of asset that can put in a 20% green candle in a single day. So better to just hold some Bitcoin, DCA in, hold a longer term position, and then swing trade and take advantage of momentum trading, which I'll be speaking about in these market updates, to try and get those micro Bitcoin moves, because it's the type of asset that is just it can literally go from 80k to 100k in the space of 2 days if there's the right catalysts. So I mean, Bitcoin, in my opinion, looks more asymmetrical as a trade versus gold, but once again, different focuses. One's diversification, one is more of a concentrated bet on wealth creation, and much riskier. The other comment I'll make, I think that's important to make today, is that the higher gold and silver go, the higher the anchor for Bitcoin. This is a really powerful thing eventually when Bitcoin does prove itself as digital gold. Now, we're not there yet, and it might not even happen this year, and it might not happen in the next 3 years, but at some point it'll happen, in my opinion, because Bitcoin is purpose built for this, especially if they can fix quantum risk, which has been a tail risk, which I think has limited Bitcoin, especially institutional allocation over the past few weeks and months probably. But eventually when this shifts and Bitcoin is respected for what it is, because the technology is incredible and I think fits perfectly into where the world is going, with a focus on AI, focus on energy, and a focus on digitalization, Bitcoin now has a much higher anchor the higher gold and silver go. So that's not saying that that guarantees a catch-up trade in the short term, but it means when it does happen, it'll be really, really explosive. So maybe even with Bitcoin, you see underperformance for an extended period, followed by extreme outperformance. So you really have to look at the average performance over a multi-year time frame, because I'm seeing a lot of people dunking on Bitcoin now, a lot of gold bugs, saying, I told you should have held gold the whole time, but that can switch really quick. All it takes is the right setup for Bitcoin. If some of the quantum risk gets resolved, that would also be a huge catalyst. Let's say there's a big institution that allocates, the US backs Bitcoin, any of these catalysts can really switch the narrative on its head. It's a very momentum-based asset as well. And as Satoshi Stacker points out in this post, you can see that as the gold price goes up, which it has been, it anchors the Bitcoin price way higher based on pretty reasonable ratios. So, in the past, Bitcoin gold had a much higher ratio. Obviously, now it's under pressure because of gold's run and Bitcoin's relative underperformance. But if you see a ratio of 27, 36, 45, you're looking at 135, 180, and 225K Bitcoin just based on gold's price yesterday. If gold went to $6,000, that raises the ceiling even further. And these are historical ratios where Bitcoin traded at before gold took a massive run in recent weeks. So, there's a scenario where the Bitcoin gold ratio goes to 54, gold's at around 6K, and you see a 300K Bitcoin if it was respected. Now, of course, at the time that Bitcoin plays a bit of catch up, this will be probably an entirely different situation. Gold price could even be way higher than this. We don't know exactly, but this math just shows you that the higher gold goes, the less hard it is, and especially relative to its market cap, the less hard it is to pump Bitcoin. So I think it's very easy in the short term to look at the chart and get bearish and stuff. And yeah, even on a short term time frame, I am feeling a little bit bearish. But from a longer term perspective, once this trade happens, it'll be so violent that I think it's too risky not to be allocated to Bitcoin. And this is eventually also when the fireworks will ripple down into the rest of the market. So that's my analysis for now. I'll be here every day this week, so make sure you turn the notification bell on. I'm going to pick a few winners now. Waka, you win $100. Let's scroll down a little bit to make it fair. Kibbers, you win 100. Scorp, you win 100. Repetail, you win 100. And Daniel, you win 100. Go email the giveaways, email in the description below. Turn on the notification bell so you get updated. I'll be back tomorrow with a market update, trying to keep these videos a bit shorter and just giving you all of my thoughts every day, as opposed to uploading less frequently, but with, much longer shows. So I'll see you in the next one. These are my thoughts today. That's my thoughts around the market shorter term, longer term. See you later. Peace.